The world is going to have to reflate, and gold and silver are going to go to wherever the moon is, if there even is a moon. I don't even know anymore. I'm such a conspiracy theorist. I don't even believe in the moon. You don't believe in the moon landing? Well, I don't believe in the moon. It's not even cheese. It's not there.
We're whalers on the moon.
We carry a harpoon,
But there ain't no whales, so we tell tall tales and sing a whaling tune.
we're whalers.
That's not how it happened.
Oh, really?
Hey guys, Raf here from the Endgame Investor. I'm away from my home base for the next few weeks. I forgot my higher quality camera. I'm on my integrated piece of crap camera here that I didn't know could have such low quality, but that's who I am. I'm a low quality cameraman. But anyway, I think the microphone is okay, though I forgot to bring that also, but I think the integrated microphone is fine. Can you hear me? Yeah, I can hear myself. I'm editing this now. So yeah, I wouldn't have uploaded it if it didn't sound good. This, for people wondering, is the handlebars of a bike that's right next to me. Anyway, what I wanted to talk about today is two things. First of all, the money supply has not recovered despite reverse repos, that extra money that was printed in 2021 during that crazy printing bonanza. All that money that poured into the banking system couldn't make it into the banking system and went back to the Fed. That is now pouring into the banking system. And despite that, we have falling deposits and a stagnating money supply, which surprised me, but we'll get into those numbers in a second. And second, I wanted to go into Germany. Germany appears to be entering its own end game with its manufacturing PMI. I don't know exactly what a PMI is. Purchasing Managers Index. What exactly is that? I don't think anybody really knows what it is. It's just another thing that people cite to sound smart, but it has some meaning and some significance because it fell to around the levels it is now, around the great financial crisis of 2008 and in the lockdowns of 2020. And Germany's housing market is falling faster than at any time in the past that I can see on a graph, and has blown the 2008 financial crisis, housing crisis, out of the water. So Germany could be entering its own endgame as its price inflation, consumer price inflation statistics continue to rise despite the falls in the capital sector, which smells like stagflation to me. And Germany is the engine of the Eurozone. Let's go into the share screen so we can get out of this low quality camera crap and move on with the video. So the first thing I want to show you is this. And this is reverse repos. I've shown this a few times on the silver report at Arcadia Economics. And here, I think I've showed it a few times. But reverse repos, this leftover money, let's zoom out so you can see what I'm talking about. This is when it really started to go crazy. And let's get this thing out of the way here. My stupid face. So we have, reverse repos going from about 0 in January 2021 to about a high of whatever that is, 2.553 trillion at the end of 2022. And now they are down to 1.72 trillion. The Treasury started to sell its T-bills after the raising of the debt ceiling around here on Friday, June 2nd. This was the low. Actually, here is when they started selling, but we'll count from here the end of the month. 2.254 trillion. We're now down to 1.72 trillion. So that's what, like 500, 600 billion dollars. It's a lot of money. It doesn't matter how much it is. You would expect that this money pours into the money supply, which it has, and I'll show you that here. This is the Treasury's cash balance as of July 21st, 2023. And you can see here that the TGA withdrawals, this is their bank account. This is not part of the money supply. But this, because it's considered outside the money supply, it's not counted in M2 because it's the government's bank account. TGA withdrawals, this is how much money that this account has spent into the economy since July 1st. That's $1.331 trillion. If we search for this report, the end of June, we can see how much money the Fed, the Treasury spent into the economy in June, right? When they raised the debt ceiling on June 1st, the account bottomed out on June 2nd, and they spent just over $2 trillion into the economy. Now, not all of that is going to stay in the money supply. A lot of it's going to recycle back into T-bills and other things, but you would expect that the money supply would fly up just a little bit from here. And we saw a little bit over here in deposits, right? As the government started spending money into the economy, here is where they started spending. And we saw a little bit of a move up in deposits in the banking system. So, because we would expect the reverse repo money to flow into the banking system as the government spends it into circulation. And we saw a little bit of that from 17.276 trillion to 17.367 trillion. So it's about $100 billion. So yeah, some of it's spent into the banking system, but not. Look at this week. This week we're back down to $17.289 trillion, excuse me, in deposits in all commercial banks. And this is pretty surprising given that reverse repos are still flowing out of the Fed and into the banking system. Why are deposits falling? It must be banking trouble of some other order, from some other source that I can't see yet. Now, if we move to money supply, we would have expected, this is the weekly money supply data, just came out a few hours ago as I am speaking these words. This was the last data point we had at $20.8879 trillion. That was, and then it comes out 4 weeks at a time. So the next 4 weeks, the money supply has actually fallen from there to 20.817 trillion June 12th, 20.792 trillion June 19th, all the way down to 20.722 trillion, and then a little bit up to 20.822 trillion. There's usually a jump up as the month ends. That's when the banks balance their books, and you see a little bit of a jump in money supply. We saw that here too, but it did not exceed the peak of 20.8879 trillion here on June 5th. So the money supply is stagnating to somewhat still in decline, despite the flows into the banking system from reverse repos. That would suggest to me that asset prices are near an intermediate top, because if the money supply is not expanding, there's not much fuel left for stocks and bonds and other things to expand their rallies. Let's move into Germany right now. We heard a lot about the PMI in Germany. This is the actual press release, and these are the paragraphs that I wanted to get into. It says here, whilst, isn't that a great word, whilst? Whilst overall price pressures continue to ease during July, there were once again contrasting trends at the sector level. Input cost inflation maintained its downward trend. So it looks like price inflation is going down, at least for factories and manufacturers, seen since October, to reach the lowest for nearly 3 years. Wow, inflation is going down. However, it says the result was driven entirely by a sharp and accelerated drop in manufacturing purchase prices, one of the fastest in the series history, with service sector costs rising sharply and even at a slightly quicker rate than in June. So consumer level inflation, or inflation that's close to the consumer sector and the services sector, is still rising, whereas it's the manufacturing prices that are going down. Next paragraph. It was a similar situation for output prices here. The overall rate of inflation at a 29th month low, although it was still firmly above pre-pandemic historical average. Deeper factory gate price cuts contrasted with a further sharp and slightly accelerated increase in service sector output charges, the latter reflecting the pass-through of higher costs to customers. So closer to the consumer sector, you have higher prices, whereas farther from the consumer sector, in the capital sector, you have lower prices, and this is the effect of higher interest rates. So you have Germany heading into stagflation. It's going to cause severe stress in its banking system, and they're going to have to be bailed out, and they're going to have to reflate before consumer prices even have a chance of stabilizing. If we go into the actual Germany manufacturing PMI, you can see this is at 38.8 over here. It's this little bar that I'm pointing at with my cursor. Only been lower during the 2020 lockdowns over here and during the trough of the great financial crisis. So the manufacturing sector in Germany, which runs the entire Eurozone, is the engine, that they say, of the entire Eurozone, that is in big trouble, looking very bleak. It gets worse. This is manufacturing for the G20, or for Europe, actually. But if you look at the entire world, if you had, this is a PowerPoint picture screenshot, but if you click on world, this is from Trading Economics, and these are the PMI numbers for each country, the latest, all for June or July 2023, and Germany is at the bottom. If you look at the entire world, Germany is at the bottom of all 52 countries tracked by Trading Economics. Looks really bad, but it gets worse. Here is the housing index for Germany, year over year, price increase or decrease. We're at negative 5.2%, which is by far the lowest ever of this series. Here's the 2008 financial crisis. It's bad, but it's nowhere near as bad as we are now. This is a serious slide here. If this was like a water slide, it would be a lot of fun. You'd probably fall off the slide, and then you'd get killed, and then like the amusement park would be sued. It wouldn't be good.
stupid tube.
So my point is Germany could be close to its end game. It's going to have to be reflated, and therefore the entire Eurozone is going to have to be reflated. And we also have the money supply in the US continuing to stagnate despite a shot in the arm from reverse repos that are flowing into the money supply and the bank system right now. It's not enough to counteract the fall in deposits, which seems to have restarted. There is another financial crisis ahead of us. We are not done. And what happens after that? The world is going to have to reflate, and gold and silver are going to go to wherever the moon is, if there even is a moon. I don't even know anymore. I'm such a conspiracy theorist. I don't even believe in the moon. You don't believe in the moon landing? Well, I don't believe in the moon. It's not even cheese. It's not there.
One of these days, Alice, bang, zoom, straight to the moon.
Does YouTube have like a moon policy? Does it have to exist? Does that make me a lunatic?
No way. That's great.